Hello everyone, welcome to Bond Bytes, daily bond market highlights from INRBonds. I'm Nikhil. In today market highlights, we have 10-year gsec yields closed at 709 and 5-year at 708. And in the gsec auction cutoff today, we have a 2026 gsec was auctioned at 704, and we have a 2037 gsec auctioned at 7.11%. And 2063 GSEC was auction cutoff was seen at 7.13%. On the equity front, we have Sensex and Nifty traded on a positive note, closed on a positive note, and USD INR also traded on a positive note. So, positive note to flattish. On the global bond space, we have 10-year US Treasury yields traded at 4.26%, slightly higher than the yesterday's close. And coming to our update on the INRBonds retail high yield bond index. The index is a mix of the retail liquid 3-year corporate bonds, the most traded retail corporate bonds versus the 3-year GSEC. So we have a diversified set of 8 bond securities with a 3-year constant maturity incorporated into the index, and these corporate bonds and the GSEC's performance has been incorporated into the NAV. The NAV of the corporate bond index is currently at 9.58% as of yesterday, which remained flattish when compared to the last 15 days and also over to the last 1 month, since the short-term liquidity in the market is in decade high deficits, and the rates over the short term, that is like 3 months to 24 months or 30 months, we have seen the rates been traded on an elevated note. So coming to the spreads between the 3-year GSEC and the NAV of the index, the spreads remain flattish for over the last 15 days and as well as over the month. If you have to compare with the over year-on-year basis, the spreads have risen by 70 basis points. So post-budget, we have seen the yields falling over the longer end of the curve, that is be it 10-year, 14-year or beyond that, where the sharp fall was there. And throughout there, the whole curve of the index, the GSEC is flattish. Coming back to the NAV of the fund, NAV of the index, the currently it is at 9.585%, and we expect the spreads remain to be elevated between the GSEC and the corporate bonds as we go towards the end of March, where we have a lot of liquidity crunch in the market. Thank you for listening in, and do subscribe to our YouTube channel if not done so already. Thank you.